All right, get ready to dive deep because today we're exploring the wild world of Solana DeFi.
That's exciting.
It is, especially with the two platforms we're looking at today. Ape Pro, the so-called meme coin terminal, and Jupiter, which aims to be, well...
your everyday exchange, basically.
Exactly, on Solana, of course.
Yep, all things Solana DeFi. Now, what's fascinating is how these two platforms are tackling this space in such different ways.
Right. It's like they're targeting entirely different segments of the Solana DeFi universe.
Absolutely. Ape Pro is all about, well, speed.
And security, especially in the often chaotic realm of meme coins.
Which, let's be honest, can be a bit of a wild west out there.
For sure. But that's where Ape Pro's approach with their smart wallet program gets really interesting.
It's a pretty unique concept, definitely different from what we typically see with wallets like Phantom.
Oh yeah, it's a whole different ballgame. Ape Pro's smart wallet is designed to make those quick-fire meme coin trades super smooth.
Where every second counts, right?
Absolutely, every second. Then we have Jupiter, which seems to be taking a much broader approach, offering everything from basic swaps to...
limit orders, dollar cost averaging, even a full-fledged perpetual exchange.
And don't forget about blinks.
Oh yeah, blinks. Swapping tokens right on Twitter. That's definitely something I want to learn more about.
Me too. There's a lot to unpack with both platforms, so where should we start?
About Ape Pro. Their Ape account program seems like a good place to kick things off.
Okay, let's dive into that. From what I've read, Ape Pro doesn't use traditional wallets like Phantom.
You got it. Instead, they've got this thing called a smart wallet program. It lives directly on the Solana blockchain.
On-chain wallets, huh? That's a pretty different approach.
It is. And to activate it, you need to deposit 0.1 SOL.
So it's like a dedicated wallet specifically designed for Ape Pro.
Exactly. And it comes with some pretty unique perks. For starters, it allows for seamless social logins. No more messing around with those long seed phrases.
That's definitely a plus for user-friendliness. But what about security? Isn't it riskier to have your wallet managed by a smart contract?
Well, Ape Pro has actually implemented some really robust security measures. They use something called multi-party computation, or MPC for short.
Okay, MPC. I've heard that term thrown around, but can you break it down for our listeners?
Sure. Imagine your private key is like a super secret code that unlocks your funds. With MPC, that code is split into multiple pieces, and each piece is held securely by a different party.
So kind of like a bank vault with multiple locks that require multiple keys to open?
Exactly. And to authorize any transaction, all those pieces need to come together. Makes it much harder for hackers to steal your funds.
Ah, so it's like a distributed security system. The more pieces the key is split into, the more secure it becomes.
You got it. And that's just one of the security features Ape Pro has implemented. They're really trying to address those concerns head on.
Now, you also mentioned something about signless transactions. What's that all about? Does that mean I never have to approve anything?
Not quite. It's more like Ape Pro can authorize certain transactions on your behalf without you needing to sign every single time.
So it's like giving Ape Pro limited power of attorney over my funds.
In a way, yes, but only for specific actions. It's all designed to speed up trading, which is crucial in the meme coin world.
Where things move lightning fast.
Exactly. But there are limitations in place too. Right now, for instance, you can only withdraw SOL from your Ape Pro account.
Okay, so there are still some restrictions to prevent complete control.
Right. It's a balance between speed and security, and they're still fine-tuning the system.
Makes sense. But all this sounds perfect for meme coins, where speed is key.
Absolutely. And to further cater to meme coin enthusiasts, they've created these curated token feeds called the New Tokens feed and the Hunt Gems feed.
Okay, token feeds, what are those exactly?
The New Tokens feed is basically a live stream of tokens launched within the past 24 hours. So you can literally see these meme coins being born in real time.
That's wild. What about the Hunt Gems feed?
Think of it as a curated list of promising projects, categorized by their stage of development. New creations, those about to graduate, and those that have already graduated.
So it's like a meme coin scouting report, highlighting the ones with potential.
Exactly. And you can even filter by things like liquidity, volume, market cap, social media presence.
It's like having a team of researchers constantly digging for the next big meme coin.
Exactly. And the best part, you can buy or sell those tokens directly from the feed. No need to sign each transaction.
Again, thanks to that smart wallet program.
Yep, it's all about streamlining the experience.
So they've really thought through the meme coin trading game. But let's say I spot a meme coin that I think is about to explode. What trading features does Ape Pro offer beyond those quick buy and sell options?
They offer something called signless MEV protected swaps.
Hold on, let's back up for a second. For those who might not know, can you explain what MEV is and why it's important to be protected from it?
Sure thing. ME stands for miner extractable value. It's basically a way for miners or validators to manipulate transactions and profit at the expense of, well, regular users like us.
So it's not exactly ethical, is it?
Not really. It can lead to higher slippage, failed trades, and in volatile markets like meme coins, it could be a real problem.
So 8Pro is trying to protect its users from MEV, but how do they do that, especially with signless swaps?
They've partnered with Jito, a protocol specifically designed to fight MEV on Solana.
Jito, huh? How does that work?
Jito acts like a middleman, ensuring that trades are executed fairly and efficiently, even if you're not signing each transaction.
So it's like a bodyguard for my trades, making sure I'm not getting ripped off by miners trying to game the system.
You could say that. It adds an extra layer of protection, especially when you're trading quickly and can't always scrutinize every detail.
That's impressive. But what about traders who prefer using limit orders? Does 8Pro cater to that?
They do. But their limit order system is a bit different. It works by executing your order as a market order within a specified slippage tolerance once your price conditions are met.
So it's kind of a hybrid between a limit order and a market order.
Exactly. Imagine you set a buy limit order for a specific price. Instead of waiting for the order book to fill, 8Pro automatically converts it to a market order when the price hits your target.
So it ensures you don't miss out on sudden price movements.
You got it. And they offer 4 main types of limit orders: take profit, stop loss, buy dip, and buy above.
So I can set it up to automatically buy a meme coin if it dips to a certain price.
Exactly. But remember, always set your slippage and MEV protection settings carefully. Even with safeguards, there's always risk, especially with meme coins.
Right, of course. No system is foolproof. Speaking of risk, how does 8Pro approach safety, especially with all the meme coin scams out there?
They have a token checklist that helps you assess the risk of a token before you trade.
So like a quick risk assessment tool built into the platform.
Exactly. It checks for things like suspicious mint authority, freeze authority, a low percentage of liquidity pool burn, uneven distribution among top holders, all those red flags.
So it's like a mini audit before you jump into a trade.
You could say that. It gives you more information to make informed decisions.
That's a great feature, especially for newer tokens that haven't been vetted by the community.
Yeah.
It seems like 8Pro is really trying to bring some order to the meme coin chaos.
They are. But one last question that's probably on everyone's mind. Mobile app.
Yeah, is there one? Everyone's trading on the go these days.
No dedicated app yet, but their platform is designed to be super mobile friendly.
Okay, so it works well on phones and tablets.
Yep, you can even add it to your home screen for a more app-like experience.
That's good to know. Okay, I think we've covered 8Pro pretty thoroughly. What do you say we switch gears and explore Jupiter, the so-called everyday exchange?
Sounds good to me. It's a platform that's trying to do a lot, so there's a lot to unpack.
For sure. From what I've gathered, at its core, Jupiter is a swap aggregator.
Right. It connects to a wide range of liquidity sources across Solana, so you're basically guaranteed to find the best price for your trades.
So if I want to swap, let's say SOL for USDC, Jupiter scans all the available liquidity pools and finds me the most efficient route.
Precisely. Takes the guesswork out of finding the best deal.
That's convenient, but what really intrigues me is their routing engine, Metis. What makes it so special? Is it just about connecting to different liquidity sources, or is there something more to it?
There's definitely more to it. Metis is built to handle Solana's crazy fast block times and the ever-changing market conditions of DeFi. It uses something called incremental route building.
Incremental route building. Okay, you're going to have to explain that one.
Imagine you're booking a flight with multiple layovers. Metis is like that super efficient travel agent that instantly analyzes all the possible routes and finds you the best one, considering both cost and time.
So it's not just about connecting to different liquidity pools, but finding the absolute best path for my tokens to travel through the Solana DeFi ecosystem.
Exactly. Even for complex trades involving multiple tokens.
That's some serious routing magic. But Solana's always evolving, with new tokens and markets popping up all the time. Can Metis keep up?
Absolutely. It automatically adds any new tokens and markets to its routing, so you're always at the forefront of Solana DeFi.
That's impressive. Okay, so we've established that Jupiter is great for finding the best swap prices. What other tricks does it have up its sleeve?
Well, it boasts a whole suite of advanced trading tools, including dollar cost averaging and value averaging. They're getting super popular in crypto.
DCA and VA, I've definitely been hearing a lot about those lately. Can you give us a quick rundown of how they work and why someone might want to use them?
Sure. Dollar cost averaging, or DCA, is basically a strategy for spreading your investments over time to reduce the impact of volatility.
So instead of buying a lot of a token at once, you buy smaller amounts at regular intervals.
Exactly. It helps smooth out your entry price and take some of the emotion out of trading.
Like the slow and steady wins the race approach.
You got it. Then there's value averaging, or VA, which is a bit more dynamic. Instead of buying a fixed amount, it adjusts the amount you buy based on price fluctuations, with the goal of potentially lowering your average cost.
So VA is a bit more active, trying to buy more when the price is low?
Exactly. Both DCA and VA can be great for managing risk, especially in a volatile market like crypto.
This is already sounding like a power trader's paradise. But what about those of us who prefer using limit orders? Does Jupiter offer that?
Yes, they do.
Yeah.
And they've partnered with TradingView for their limit order functionality. You get access to some of the most robust charting and analysis tools right there on the platform.
Wait, so I can use TradingView charts to plan my trades and then set limit orders on Jupiter based on my analysis?
Exactly. It's like bringing professional-grade trading tools to the Solana DeFi world.
I'm starting to see why they call it the everyday exchange. It really seems like they're trying to cater to everyone.
They are. But before we go too far, we have to talk about blinks.
Oh yeah, those Twitter swaps. How does that even work? Sounds almost too good to be true.
It's pretty innovative. You basically create a special URL on Jupiter that represents your desired swap. Then you can share that URL on Twitter.
So anyone who clicks that link can execute the swap.
Not quite. They still need to connect their wallet and confirm the transaction.
So it's more like the Blink link takes them to Jupiter, where they can then decide if they want to go through with the preset swap.
You got it. It's a way to simplify and share swap opportunities with your Twitter followers.
That's really cool. Jupiter really seems to be pushing the boundaries of what's possible in DeFi.
They're not afraid to experiment, that's for sure.
And speaking of pushing boundaries, they even have their own perpetual exchange, which is something many of our listeners have been asking about.
Perpetual contracts, huh? Those can be a bit tricky.
They can be. Can you give us a high-level overview of how perpetual trading works on Jupiter?
Well, unlike regular futures contracts, perpetuals don't have an expiration date. You can hold a leveraged long or short position for as long as you like.
Ah, so that's the perpetual part.
Exactly. And on Jupiter, it's all based on a liquidity pool model. There's no traditional order book. Instead, you're trading against a pool of assets, specifically SOL, ETH, WBTC, USDC, and USDT.
So it's similar to the swap aggregation we talked about, but with leverage added to the mix.
Precisely. And we're talking leverage up to 100x, depending on the asset.
100x leverage, that's a lot of power, but also a lot of risk, right?
For sure. Jupiter calculates a liquidation price for each position. And if the price of the asset moves against you and hits that price,
You get liquidated.
It's a safety mechanism to protect both traders and the liquidity pool.
Makes sense. But that sounds pretty stressful. Are there any tools to help manage that risk?
They offer take profit and stop loss orders, just like with regular trading. You can set these to automatically close your position at specific prices.
So it's like having an emergency brake for your perpetual trades.
You could say that. It helps automate your exit strategy and take some of the emotion out of trading, which can be pretty intense with perpetuals.
This is all starting to click. But how do they determine the price of the perpetual contracts? Are they pegged to the spot price of the underlying assets?
They use a combination of Oracle providers, actually. Dove Oracle is their primary one, but they also have Pyth Oracle as a backup.
So 2 oracles to ensure the price data is accurate.
Exactly. They even use them for sanity checks against each other.
Smart move.
Yeah.
Now, I know perpetual contracts often involve those funding rates, which can be confusing for new traders. How do those work on Jupiter?
Actually, there are no funding rates on Jupiter perpetuals.
Really? No funding rates?
Yep.
How do they keep the price of the contracts in line with the spot price then?
They use a system of hourly borrow rates instead.
Hourly borrow rate. So if I open a leveraged position, I'm essentially borrowing assets from the pool and have to pay interest on that loan.
Exactly. The longer you hold the position, the more interest you accrue.
Okay, that makes sense. But how are those borrow fees actually calculated?
They use a pretty clever counter-based system. Each pool and position account has a global cumulative interest rate counter and a position-specific borrow rate snapshot. The difference between these two is what determines the borrow fee.
So it's basically tracking the difference between the total interest accrued by the pool and the interest accrued on my specific position.
Yep, it's a pretty efficient way to keep track of everything without needing to do complex calculations all the time.
I like efficient. Okay, we've covered how positions are opened, managed, and liquidated. We've talked about leverage, borrow rates, and the Oracle system. But what about fees? What kind of fees can traders expect on Jupiter's perpetual exchange?
There are a few to be aware of. First, there's a base fee for opening and closing positions, which is currently 0.06% of the position size.
Okay, a base fee. What else?
Then there's a price impact fee, designed to discourage large trades that can move the market too much. The larger the trade, the higher the fee.
So it's a way to prevent people from manipulating the market.
Exactly. It encourages traders to break up large orders into smaller ones, which helps with stability.
Makes sense. And what about those borrow fees we discussed earlier?
Those are separate and calculated based on your leverage and how long you hold the position.
Okay, so base fee, price impact fee, borrow fees, and of course the standard Solana network fees, which are usually pretty tiny.
Exactly. They lay it all out clearly on their website, Jupiter Station, so no surprises.
Transparency is always a good thing. But even with all these safeguards, I imagine perpetual trading can still be pretty risky.
Absolutely. It's not for the faint of heart, that's for sure. You need to understand the potential for losses before you even think about diving in.
Leverage is a double-edged sword. It can amplify gains, but it can also magnify losses.
Exactly. But for experienced traders who are comfortable with the risks and are looking for an innovative platform for perpetual trading on Solana,
Jupiter is definitely worth considering.
Without a doubt. They've done a great job of combining cutting-edge technology with a user-friendly interface.
And they haven't forgotten about security and education, which is great to see.
Absolutely. It's a pretty well-rounded platform overall.
Okay, before we wrap up this deep dive into Jupiter, there's one more tool I want to touch on, Jupiter Lock.
Ah, yes, Jupiter Lock. It's a simple tool, but can be really powerful, especially for new projects in the DeFi space.
It's a platform for locking and distributing tokens over time, which has become pretty standard practice these days.
It's a good way for project teams to show their commitment to the long term and build trust with the community.
Exactly. It helps mitigate the risk of a rug pull, which unfortunately is always a concern in DeFi.
Sadly, that's true. But Jupiter Lock can help with that. So how does it actually work?
Yeah, walk us through it. How do you actually create and manage a token lock on Jupiter Lock?
It's pretty straightforward. The project team sets up a lock, specifying how many tokens to lock, the recipient's wallet address, the start date, and the duration.
Okay, so the basics. Anything else?
They can also include a cliff period if they want.
A cliff period? What's that?
It's basically a waiting period before any tokens are released. Let's say there's a 1-year cliff followed by a 2-year vesting period. No tokens are released for that first year. Then they're gradually released over the next 2.
Ah, so it's like a built-in incentive for early investors and team members to hold on to their tokens for the long haul.
You got it. Aligns everyone's interests with the project's long-term success.
Makes sense. And once the lock is created, is it set in stone? Can the project team change it later if needed?
Jupiter Lock offers some flexibility there. The project team can choose who controls the lock. No one. Only the creator, only the recipient, or either one.
So they have some options for managing the lock depending on how they set it up initially?
Exactly. But generally, it's best to be transparent about the terms from the get-go and avoid making changes unless absolutely necessary.
Right. Consistency and transparency build trust.
For sure. Now, if you want to track the progress of a lock or claim your vested tokens, Jupiter Lock has a user-friendly interface for that.
So you can connect your wallet, see all your locks, and claim any available tokens.
That's it. Simple and easy to use.
And since it's open source and audited, users can be confident it's secure.
Absolutely. It's a valuable tool for both project teams and investors. Adds a layer of trust and transparency to the whole tokenomics side of DeFi.
I agree. It helps level the playing field and protects investors from potential scams. Well, it seems like we've explored Jupiter pretty thoroughly, from its swap aggregation and advanced trading features to its perpetual exchange and even its innovative token locking platform.
We've covered a lot of ground for sure. It's clear Jupiter is a force to be reckoned with in the Solana DeFi ecosystem.
They've definitely made their mark, but no platform is perfect. What do you think? Are there any areas where Jupiter could improve? What are some potential weaknesses we should be aware of?
That's a great question. You know, one area they could potentially improve is their user interface. It's well designed overall, but it can be a bit overwhelming, especially for newcomers. There are just so many features, and options.
I see your point. They're trying to do a lot, and sometimes that can lead to complexity.
Exactly. Maybe simplifying the UI or offering different views for different levels of users could help.
Good point. Any other thoughts?
Well, like all DeFi platforms, scalability is always a challenge. As Solana keeps growing, Jupiter will need to make sure they can handle the increased traffic without sacrificing speed or performance.
Right. Scalability is a never-ending battle in the blockchain world. Any other areas for improvement you see?
One more thought is they could potentially beef up their educational resources. Jupiter Station is a great start, but they could offer even more in-depth tutorials and resources.
Yeah, maybe webinars or even interactive courses on DeFi and specific trading strategies. That could help attract a wider audience.
Absolutely. Education is so crucial for wider adoption. The more people understand DeFi, the better.
Couldn't agree more. Okay, I think we've thoroughly dissected Jupiter, exploring its strengths, its weaknesses, and its potential for growth.
It's been an insightful deep dive, that's for sure.
Before we wrap up this part of our conversation, though, I want to circle back to something we talked about with Ape Pro smart wallets. It's a different approach to wallet management, and it raises some interesting questions about security, control, and ease of use. What are your thoughts on this new paradigm?
It's definitely a fascinating development. Smart wallets have the potential to revolutionize the user experience in DeFi. Traditional wallets, while secure, can be pretty clunky, especially for new users.
Yeah, not exactly the most user-friendly experience.
Right. Smart wallets aim to simplify things by handling key management behind the scenes, often using advanced security like MPC.
So they make DeFi more accessible to the average person.
Exactly. But there's a trade-off, of course. By relying on a smart contract, you're placing some level of trust in that contract and the platform providing it.
So it's a balancing act between ease of use and control?
You could say that. It depends on your priorities as a user. If you value simplicity and are comfortable with some level of trust, a smart wallet might be a good fit.
But if you want absolute control over your keys and want to minimize reliance on third parties,
then a traditional wallet is probably the way to go.
Makes sense. It's a complex issue with no easy answers. I'm curious to see how this all evolves in the coming years.
Me too. It's a rapidly changing space. We'll definitely be keeping a close eye on it.
For sure. Okay, I think it's time to wrap up part 2 of our deep dive into Ape Pro and Jupiter. We've uncovered a ton of information, from swap aggregation and advanced trading tools to perpetual trading and token locking. We even touched on the philosophical implications of smart wallets and the evolving landscape of wallet technology.
It's been a whirlwind tour of the Solana DeFi ecosystem. We've seen how these platforms are pushing the boundaries of decentralized finance, both in terms of technology and in terms of building community.
We've only scratched the surface, though. In the final part of our deep dive, we'll step back and consider the bigger picture. We'll explore the role of meme coins in the grand scheme of DeFi, the growing importance of user education, and the future of this space on Solana and beyond.
Sounds like a fascinating discussion. I'm looking forward to it.
Stay tuned for part 3.
Jupiter really is a powerhouse when it comes to features.
It is. Last time we explored Ape Pro and its niche in the fast-paced world of meme coins.
A lot of speed and security baked right in.
Exactly. But now let's turn our attention back to Jupiter and those advanced features we briefly touched on.
Ready when you are.
Okay, so we talked about Jupiter's swap aggregation and that impressive routing engine, Midas.
Finding the best prices across Solana.
Right. But I'm curious about the actual mechanics of executing a swap on Jupiter. How does it handle things like slippage and fees? Do users have any control over that?
Jupiter actually gives users 2 modes for executing swaps. Auto and manual.
Okay, 2 different approaches. Tell me more.
In auto mode, you set your maximum slippage tolerance, and Jupiter takes care of the rest. It's great for convenience.
So it's like set it and forget it for swaps.
Pretty much. But if you want more granular control, there's manual mode. It lets you tweak slippage and fees to your liking. You can choose fixed or dynamic slippage and even pick specific routing options.
So it caters to both casual swappers and more experienced traders who want to fine-tune things.
Exactly. They've tried to make it versatile.
Now, security is obviously a huge concern in DeFi. How does Jupiter ensure swaps are executed safely? Anything to protect users from front-running or other exploits?
Jupiter has a bunch of security features. One of the big ones is transaction simulation. Before you execute a swap, your wallet simulates it.
So you can see exactly what's going to happen before you commit.
Exactly. It shows you how your balances will change, any fees you'll incur, everything.
Like a preview of the swap?
Yep. They also have imposter token filtering and community verification to help weed out scams.
Makes sense, especially on a platform with so many tokens available. It's great they're taking those steps to protect users.
They're serious about security. They even have a 14-day probationary period for all newly listed tokens.
Oh, interesting. Tell me more about that.
Any new token on supported AMMs gets routed on Jupiter, but with a warning symbol reminding users to be cautious. Gives the community time to vet it.
So new tokens are kind of in a trial period for a couple of weeks.
You could say that. After 14 days, if everything checks out, the token becomes fully integrated.
That's a smart approach. Balances access to new tokens with protecting users. Okay, let's dive into some of those advanced features we touched on earlier. I know a lot of our listeners are curious about dollar cost averaging and value averaging.
DCA and VA, two powerful tools.
We briefly explained how they work, but I'd love to understand how Jupiter specifically implements them.
Sure. Let's start with DCA. When you create a DCA order on Jupiter, your tokens go into a special account managed by a smart contract, like a DCA vault.
Okay, a DCA vault. So Jupiter automatically executes the DCA orders from there. I don't have to manually buy at each interval.
You got it. You choose the asset, how much you want to invest, and how often. Jupiter does the rest. Let's say you want to buy $50 worth of SOL every week for 3 months.
Okay, I deposit my USDC, and Jupiter handles the weekly purchases at the best price.
Exactly. Seamless and automated.
Now, what happens to the SOL that I buy? Is it stuck in that DCA vault?
Nope. It's automatically transferred to your wallet with each purchase.
Okay, so it's constantly flowing back to my wallet. What if I'm DCAing into a token that's not SOL? Do I need to do anything special?
Good question. For any SPL token besides SOL, you need to have an associated token account, or ATA, open for that token. It's a special account for holding that specific SPL token.
Like a dedicated wallet for that token.
Exactly. And the good news is, Jupiter's DCA feature usually opens the necessary ATA automatically. But it's good to be aware of it.
So it's best to let Jupiter handle that part.
Exactly. They've made it pretty foolproof. At the end of the DCA cycle, any remaining tokens and the small amount of SOL used for initialization are sent back to your wallet.
So it's all taken care of. No need to manually close the vault or anything?
Well, they've even got some clever mechanisms to mitigate MEV front running.
Oh, right. Front running can be a problem with DCA orders. How do they prevent that?
They add some randomness to the execution times. Makes it much harder for bots to predict and exploit your orders.
So it throws those pesky bots off the scent.
Exactly. Keeps things fair. So, DCA on Jupiter is easy, secure, and they've thought about those tricky edge cases.
Very impressive. Now, what about value averaging? Does it work similarly?
The setup is very similar. VA order, choose your asset, deposit your tokens into a dedicated VA vault. But instead of a fixed amount, the VA algorithm calculates how much to buy based on your target portfolio value.
Okay, so VA is about hitting a specific portfolio value, while DCA is about consistent investment regardless of the price.
You got it. VA aims to buy more when the price is low and less when it's high, potentially lowering your average cost.
I see the appeal of that, but how does Jupiter figure out how much to buy at each interval?
The VA algorithm handles that. It looks at the current price, your target portfolio value, and your previous investments. It does all the heavy lifting.
Like a robo-advisor for my crypto, constantly adjusting to reach my goals.
Exactly. And like DCA, the tokens you buy through VA go straight to your wallet, and they use that same randomness trick to prevent front running.
So, similar setup, but with that dynamic adjustment based on price?
Precisely. Both DCA and VA can be powerful, but remember, they're just tools, not guarantees.
Right. No magic formula for crypto riches.
Exactly. You still need to do your research, choose assets you believe in, and understand the risks.
Solid advice. Always good to emphasize that. Now let's talk limit orders. We know Jupiter uses TradingView, but what's that integration actually like for users?
It's really well done. You get TradingView charts and indicators right inside the Jupiter platform.
So I can do all my technical analysis in TradingView and then execute limit orders on Jupiter without ever leaving the platform.
That's it. It's bringing professional level tools to Solana DeFi.
That's amazing. But what about people who are new to technical analysis? That can be pretty intimidating.
Jupiter's got you covered. They have a ton of educational resources on Jupiter Station, including guides on technical analysis using TradingView and all those DeFi basics.
They're really committed to education, which is great to see.
It's part of their mission to make DeFi more accessible.
I love that. Okay, I think we've covered DCA, VA, and limit orders. Time to talk about the elephant in the room, Jupiter's perpetual exchange.
Perpetuals. leverage, liquidation, all that fun stuff.
We skimmed the surface earlier, but I'd love to dig a bit deeper. Remind us how perpetual trading works on Jupiter.
Sure. It's based on a liquidity pool model. Instead of order book, you're trading against a pool of SOL, ETH, WBTC, USDC, and USDT. To participate, you need JLP tokens, which you can easily get through Jupiter Swap.
Right, JLP tokens represent your share of the pool. But let's break down opening and managing a position. What are the steps?
First, you pick the asset you want to trade, long or short. Then you choose your leverage, up to 100x, depending on the asset and collateral.
And just to be clear, 100x leverage means you control a position 100 times larger than your collateral.
Exactly. Powerful but risky.
Got it. What happens next?
Jupiter calculates your liquidation price. If the market moves against you and hits that price, boom, your position is closed.
Liquidation, the DeFi trader's worst nightmare.
Pretty much. But they have that habit. Take profit and stop loss orders to help you manage risk and potentially automate your exit.
So, similar to those limit orders we discussed, but for managing open positions on the perpetual exchange.
You got it. It's all about giving you more control.
Now, how does Jupiter determine the price of the perpetual contracts? Are they pegged to the spot price of the underlying asset?
They use a two-oracle system. Dove Oracle is the primary, and Preeth Oracle as a backup. Ensures accurate and reliable pricing.
Two oracles for double the confidence.
Exactly. And they do sanity checks against each other.
That's a clever system. Now, I know perpetual contracts often have funding rates. How does Jupiter handle those?
Actually, no funding rates on Jupiter perpetuals.
No funding rates at all. How do they keep the perpetual price aligned with the spot price then?
They use hourly borrow rates. When you open a leveraged position, you're borrowing assets, and you pay interest on that loan.
The longer you hold, the more interest accrues.
Exactly. It's important to factor those borrow fees into your strategy.
Okay, how are those borrow fees calculated? Is it some super complicated formula?
It's simpler than you might think. It's a counter-based system. The pool and position accounts track things to determine the borrow fee.
Sounds like a neat way to keep track of it all.
It is. Okay, we've covered positions, leverage, borrow rates, oracles. But what about fees in general? What can traders expect to pay on Jupiter's perpetual exchange?
Yeah, break down the fee structure for us.
Sure. First, there's a base fee for opening and closing positions, 0.06% of the position size.
Okay, a base fee. What else?
Then there's a price impact fee, which scales with the size of your trade. Larger trades have a larger impact on the price, so they have a higher fee.
It's like a deterrent against market manipulation.
Exactly. Promotes stability and fair trading. And of course, there are those borrow fees, which we already discussed, and the standard Solana network fees, which are usually negligible.
Okay, so we've got the base fee, price impact fee, borrow fees, and the usual network fees. Seems pretty reasonable compared to some other perpetual platforms I've seen.
They've tried to strike a balance between functionality and affordability.
And they're very transparent about it all, which I appreciate.
Transparency is key in DeFi. But it's important to remember, even with all these safeguards, perpetual trading is inherently risky.
Yeah, leverage can be a dangerous game if you're not careful.
Absolutely. But for experienced traders who understand the risks and are looking for a powerful platform on Solana,
Jupiter's perpetual exchange is definitely worth checking out.
I agree. They've built a solid platform.
Okay, let's shift gears one last time. I want to talk about a tool we mentioned briefly earlier, Jupiter Lock.
Ah, yes, Jupiter Lock. Simple but effective.
It's a free open source platform for locking and distributing tokens over time.
Which has become almost a requirement for new DeFi projects.
For sure. It's a way for project teams to show they're in it for the long haul, not just a quick cash grab.
And it helps prevent rug pulls, which sadly are all too common in this space.
Unfortunately, yeah. So how does Jupiter Lock work? How do you create and manage a token lock?
It's surprisingly easy. The project team sets up a lock, specifying the amount of tokens, the recipient's address, the start date, and the duration. They can also add a cliff period if they want.
Okay, can you remind us what a cliff period is?
Sure. It's a waiting period before any tokens are released. No tokens for the first year, then gradual release over the next 2 years, for example.
It incentivizes long-term holding.
Exactly. And once the lock is created, Jupiter Lock offers some flexibility for managing it. The project team can choose who has control over the lock. No one, the creator, the recipient, or both.
So they have options for how the lock is managed.
Right, but it's always best to be upfront about the terms and avoid changes unless absolutely necessary.
Transparency and consistency are crucial for building trust.
Couldn't agree more. Now, for tracking progress and claiming vested tokens, Jupiter Lock has a very intuitive interface.
So connect your wallet, see your locks, and claim your tokens when they're available.
That's it. Simple and secure.
And being open source and audited adds another layer of confidence.
Exactly. It's a great tool for both sides, projects and investors. Adds transparency and accountability to tokenomics.
It seems like we've explored just about every nook and cranny of Jupiter, from swaps to perpetuals to token locking.
It's an incredibly versatile platform.
We've talked about its strengths, but what about its weaknesses? Any areas where Jupiter could improve?
Good question. One area might be their user interface. While it's good overall, it can feel a bit overwhelming at times, especially for new users.
Especially with so many features packed in.
Exactly. Simplifying the UI or offering different views or different experience levels might help.
Makes sense.
Anything else? Scalability is always a concern for DeFi platforms. As Solana grows, Jupiter needs to ensure they can handle the increased load without slowing down.
Yeah, that's an ongoing challenge for everyone in this space.
And maybe they could expand their educational resources even further. Jupiter Station's a great foundation, but more in-depth tutorials and webinars could be beneficial.
More ways to learn and get comfortable with DeFi.
Exactly. The more people understand it, the better for everyone.
Okay, I think we've thoroughly dissected Jupiter. Its strengths, its weaknesses, its potential for growth.
It's been a fascinating deep dive, that's for sure.
Before we wrap up this part, let's go back to something we discussed with Ape Pro. Those smart wallets. It's a new approach to wallet management, and it raises questions about security, control, and ease of use. What are your final thoughts on this?
It's a really interesting development. Smart wallets have the potential to make DeFi much more user-friendly. Traditional wallets can be a real barrier to entry.
Yeah, they're not exactly intuitive.
Smart wallets try to solve that by handling key management behind the scenes, often with advanced security measures like MPC.
So they're trying to make DeFi less intimidating for the average person.
Precisely. But you're putting some trust in the platform and the smart contract.
So it's about finding the right balance between ease of use and control.
Exactly. If you value simplicity and are okay with that level of trust, a smart wallet could be a good fit.
But if you prioritize complete control over your keys,
then a traditional wallet is probably the better option.
It's a trade-off, and it ultimately depends on your individual needs and preferences.
And how comfortable you are with different levels of risk.
Right. Well, it's clear this area of wallet technology is evolving rapidly. I'm curious to see what the future holds.
Me too. It's definitely a space to watch.
For sure. Okay, that wraps up part 2 of our deep dive into Ape Pro and Jupiter. We've covered so much. Swap aggregation, advanced trading tools, perpetual trading, token locking, even the philosophical implications of smart wallets.
It's been a whirlwind tour of the Solana DeFi ecosystem. We've seen how these platforms are innovating and pushing the boundaries of decentralized finance.
But there's still so much more to explore. In our final part, we'll step back and consider the broader implications of these platforms. We'll talk about the role of meme coins, the importance of education, and the future of DeFi on Solana and beyond.
Sounds like a great way to wrap up this deep dive.
Stay tuned for part 3. And we're back for the final leg of our deep dive into the world of Solana DeFi. We've explored Ape Pro, the meme coin terminal, and journeyed through the versatile landscape of Jupiter.
Unearthing a ton of tools and strategies along the way.
Yeah, we've really gone deep.
It's been more than just code and protocol, though, hasn't it? It's about the people, the communities, the whole culture of DeFi that's emerging.
Absolutely. It's fascinating to see it all unfold. Speaking of communities, let's revisit a topic that always sparks debate: meme coins. Ape Pro has really embraced that corner of the crypto world.
A corner that some might say is a bit controversial even.
For sure. Meme coins are, well, they're unique, often questionable fundamentals, but with huge communities.
It's like they've tapped into this playful, almost gamified side of crypto, which can be both a good and bad thing.
Definitely a double-edged sword. Attracts a lot of new people, but also comes with a ton of risk. High volatility, scams, the whole 9 yards. So the question is, does a platform like Ape Pro, with its focus on speed and security in the meme coin space, make those meme coins more or less risky?
That's the big question, isn't it? It's a tough one. On one hand, you could argue that by making meme coin trading faster and easier, Ape Pro might be fueling that volatility and hype.
Adding fuel to the fire.
Exactly. But then again, they're also providing tools for MEV protection, risk assessment.
Trying to level the playing field a bit.
Right. At least giving users some safeguards against those predatory practices that are, well, pretty common in the meme coin world.
True, but ultimately the responsibility falls on the individual trader.
Always. DYOR, as they say.
Do your own research.
Yeah.
Never forget that. It's a wild west out there. Speaking of education, Jupiter seems to have really made that a cornerstone of their platform.
Jupiter Station, their Discord community, they're doing a lot to educate users.
They're going beyond just the technology. They're fostering a community, building something bigger.
They seem to get it.
Yeah.
To build a truly sustainable DeFi ecosystem, you need more than just cool features.
You need a foundation of knowledgeable, responsible users.
Exactly. And Jupiter's putting in the work to make that happen.
Okay, let's talk about Jupiter Lock for a moment. We touched on it before, but it's such a simple yet powerful tool.
Transparency and accountability, all baked into a simple token locking mechanism.
It's become the standard for new projects in DeFi.
And for good reason. It helps build trust, reduce the risk of those dreaded rug pulls.
Yeah, it's a way for projects to say, hey, we're serious, we're not going to dump our tokens and disappear.
And Jupiter Lock makes it easy for them to do that in a transparent way.
It's a win-win for everyone involved. Okay, it feels like we've explored just about every facet of Jupiter.
From swaps and limit orders to perpetual trading and token locking, it's a comprehensive platform.
They've really built something special. But as we wrap up, I'd love to hear your final thoughts. What excites you about the future of DeFi on Solana?
What excites me is the pace of innovation. Things are moving so fast, and platforms like Jupiter are at the forefront of that.
It's incredible to witness. Any predictions for what's next?
I think we'll see even more sophisticated tools and strategies emerge. DeFi is still in its early stages, and the potential is just massive.
It's a bit like the Wild West, full of opportunity and, let's be honest, a healthy dose of risk.
Absolutely. But that's part of the excitement.
It is. Well, that wraps up our deep dive into the world of Solana DeFi, with a special focus on Ape Pro and Jupiter. Thank you for joining us on this journey. We hope you've learned something new, gained some valuable insights.
And hopefully had some fun along the way.
For sure. To our listeners, keep exploring, stay curious, stay informed, and as always, do your own research.
Happy trading.